All righty, folks, on the daily financial news, we talked about the 10-year ripping another 12 basis points higher. It's undoubtedly going to impact mortgage. We could see 7.5% mortgage rates this week. I actually want to take this amazing hub call and talk about 8% mortgage rates. I want to say what happens at 8%. Could we see record low housing transactions? We're going to have the conversation with Matt, the mortgage guy, Patrick Kim from Fresno, one of my agents, and of course, TYLG Ty. We're going to go in the order that people showed up. And Matt, you were first today by a couple of seconds. You are the mortgage guy. Dude, what is going on this morning?
Yeah, so rates are up for anybody who's paying attention. Last week with the inflation read, we saw uptick in rates, probably on most rate sheets for most scenarios, a quarter or 3/8 in interest rate. Today, we've got another 50 basis points so far Monday morning
Right.
in rates going higher, and the 10-year treasury is ripping. But I think it's interesting, Mike, because in order to kind of predict what's going to happen, a lot of times you look and you're like, well, what have I been through that's similar to this?
Right.
Last November, September, October. September, low to mid sevens. By mid-October, 8% was like
Yeah.
the
8.03
average
yeah.
rate.
Yep.
And so one thing that I'd love to bounce around with you guys, because the truth of the matter is, like, I'll admit it here in front of the world, I don't know what's going to happen, but it makes for good conversation. And so
yeah.
Q4
Let's play this out. Let's play this out because we have receipts on this channel, which means we have videos. We over the last 2 years, we have had multiple times where rates shot up between a half and a full percentage point. I think what's different this time is my memory says both those last times, Ty, I'm going to go to you next. Both those last times they ripped in the winter, October, November, December, maybe a little bit of January.
Yep.
We're now going higher in the spring. So Ty, what does your broken crystal ball say about what's going on? What would happen at 8% mortgage rates? What say you?
Well, I think, again, this all goes back to the show notes. This has been your theme, your narrative. You've shared and taught us all. Higher for longer is a real thing. And this just proves out and shows out. So I did look at the chart, and I actually was looking at this even pre-roll before the show, but really it was September of 21 where, that September, that fourth quarter of 21, things just took off. And, it's been a trend. And that feels like at the end of 21, the end of 22, and then even the end of 23. I'm looking at the chart right now, and it just seems like we've had those spikes in the fourth quarter. A little weird to be having it right in the middle of the spring selling season. But to your credit and the things I've learned from you, it actually is probably going to be better because we're not going to see the crazy, wild, 8, 10, 12% price swings on overbids. So flippers and redevelopers, I would say just be very, very careful. I've got lots of friends. I do not want to see them get hurt. I would say just be careful. That's all.
Yeah, I want to echo that because we saw a lot of people, and they were on this channel, right? Adrian talked about 2 months in a row losing six figures. Jason talked about losing six figures. And this was obviously the run up in 22, right? The run up in 22 caught people by surprise. They got into the deal in Q4, they got out of the deal in Q1, and they lost their ass. Yeah, I think that's very good advice, right? Got to be careful. You got to play below the median. You stop this whole luxury stuff. You're not that guy. It's not that time. I think that's
foreign markets. And I'm sorry to interrupt, but as an example, I met with somebody. I did a meetup on Saturday. By the way, we're doing a meetup in Las Vegas. Anybody who's coming to WealthCon, Ryan Pineda's WealthCon, if you're going to be in Vegas on Wednesday, come out. We'll put the address in the show notes. Wednesday night, Michael and Olivia and myself, we're hosting a meetup on Wednesday the 17th at Stewart Title in Las Vegas. Come out. I was at a meetup on Saturday, and kind of a newer investor was talking about going to a different market, a high-end market, San Mateo County. And it was this flip at like 1.2 to, buy it at 1 point. No, excuse me. Basically buy it. Maybe there's a $200,000 spread, but I'm like, you don't understand percentage wise. It's only like an 18 to 20% spread, including your rehab. You could get eaten alive with rates as well as a little hiccup in the stock market.
No, absolutely. And by the way, Matt, I did see that awesome coffee mug. Do the work.
Do the work,
Yeah.
baby.
Yeah. I
Yeah,
loved it.
yeah.
I loved it.
So sorry for the sidetrack, but if the next person that comes to the Sacramento office and wants to talk, I got a few do the
Oh,
work.
goodies.
I went on a shopping spree. I got a poster. I'm gonna have more and more swag. Anybody who comes to my office knows they're gonna get a book if they come. And so yeah,
Nice.
shout out to One Rental at a Time and all the cool swag.
I appreciate it. Hey, Pete, we're going to go to you next because you're in my market. We're shopping all the time looking for deals. I remember, I want to call it, and I know it was because I just filed my taxes. It was December or Q4 of 22. You and I went on a little bit of a buying spree, right? You and I found two distressed homes on the MLS. Memory says we bought them for 30% less than ask price. It might have been 25. I think it was 30. And I don't know about you, but I guess it's selfish. I like a slower market. Slower market allows the motivated sellers to stand out. So I don't know, 8% mortgage rates. It's going to slow the market down, and maybe we get some deals. I don't know. What do you think?
Yeah. I mean, time will tell. But like you say, do the work during the times where everybody else is scared. It just primes you with more opportunities to be able to win in a place that, not many people are familiar with. You've kind of gone to this, you've lived this type of market before. You've survived
Absolutely.
it, you've thrived in it. So,
Yep.
My eyes are peeled. It's a little bit harder to come across those kind of margins right now, but obviously things are just kind of confetti's about to settle. So we'll see.
Yeah. Again, I really want to play the game. If we go back to 8% rates, transactions undoubtedly are going to slow down. Inventory will build. Days on market will build. These are all just mathematical certainties. What is interesting is what happens below and above the median, because again, I think we have a bifurcated housing market. Also, we can't forget that the government is still sticking their hands in with demand. Pat, I'm going to go to you again. Have you seen anybody talk about California Dream for All? I know that was a big thing in Fresno, California. Unfortunately, it was dead and gone in 8 days last time. Anybody working with you? You have any clients talking about California Dream for All this time?
Yeah, and right now that registration period is open. So people have to get themselves pre-approved in April. They've got to get that application over to Cal HFA. Mitch in my office is doing all of that. And I said, like, we're going to have one person who's the expert. They're going to handle all the applications. And I'm actually going to do a video this week. California Dream for All might be a program that is a fit for some people. Just don't get so one track minded as a buyer that you're like, this is the program for me. One, it's going to run out of funds. It's a lottery. Not everyone's going to get it. So like, you don't want to get your hopes up for that reason. But another reason is if we have a conversation and it seems like it's not the best fit, you've got down payment funds, you've got there's a number of reasons why it might not be a good fit for you. So talk to somebody who has access to multiple programs and can give you honest advice. One, because there's limited funds and you might not get it. And two, because it might just not be the right program for you.
Yeah. Pat, I want to go back to you on this one because you and I talked the first time about California Dream for All. And, my memory's not clearly as good as it used to be, but it kind of felt like you had overnight 5 to 10 people trying to use it. At the end of the day, I don't think anybody got through because it was gone in 8 days. To me, It feels like this time almost nobody's talking about it. So I'm curious, when you look at your book of business compared to last time, are people just as excited and I'm missing it or what? What's going on, Pat?
No, I mean, to speak particularly to my specific pool of buyers, I don't have anybody jumping on it. They are initially curious about it. But then when they start to do some research or what have you, it kind of fizzles out and no one actually follows through. I don't know exactly as to why. Maybe, to Matt's point, when they figure out the nuts and bolts about it, maybe they figure out, hey, this isn't as good of a setup for me in terms of a long-term investment as I thought, and so that's just what I suspect, but to each their own.
Yeah. Ty, I want to go to you again because when you and I add up our experience, brother, we got 50 years of doing this real estate thing. It's crazy. If we're going to be walking into an environment where transactions say go below 4 million,
Yep.
where the cost of capital is 8% for first-time home buyers, what is your experience tells you what might transpire, just might transpire over the next 9 months?
A couple things that I think we will see inventory slowly build, days on market will build. I'm already experiencing, I've got a little bit of what I would call good inventory, but weird inventory. Specifically, I've got like a condo listed. It's a probate deal where days on market are a lot longer. Why? Because there's problems with the HOA, specifically the insurance, right? California, right? Insurance. There's
Yeah.
an insurance problem with the overlaying HOA. There's probably going to be litigation
Oy.
with with the homeowners association because of the insurance. There's going to be capital calls or special
Oh,
assessments.
special
Um,
assessments. Yeah.
yeah,
Oh,
so it really is this whole, and it's a beautiful condo, beautiful, gorgeous in Marin County, gorgeous, absolutely gorgeous, but just weird because the HOA is wonky. So just generally speaking, I think the mediocre stuff, right? That
yeah.
stuff sits. Condos. If I was a flipper, I would not be excited about condos in general. Every one of the condo deals I've done, or even friends of mine, I hear these little weird stories or delays about dealing with HOAs. So
Mm,
I would say
yeah.
for people to be careful, but ultimately, experience. This will be an opportunity. If you are really active right now, it may be a little painful. I would say get to the other side quick.
Mhm.
If you have projects, I have a friend of mine, he has several,
Oy.
six or five or six flips, and they're kind of, I would say they're high end, they're above the median.
Ooh, I would
And
not be that extended.
I'm encouraging him, get these done, get
Yeah.
them done. You just don't know. You've got to catch some good news. I think all in all, they're in good high demand areas, but it just takes a little hiccup, a little
Yeah.
stock
Little.
market hiccup. They're in the Bay
Yep.
Area, stock market hiccup combined with interest rates going to 8 or 7.75,
Yeah.
and he could be really eating monthly payments on a vacant property. So I would just say, be careful, be diligent. And again, this is what I said at the meetup.
Mm.
These are your words, Michael. We're not doing good deals. We're doing great deals. We're not doing good deals. We're doing awesome, great deals.
Totally.
We only do
Yeah.
great deals. Otherwise, wholesale it, list it, pass it on to somebody else with deeper pockets and more patient money.
Yeah. No. Again, what I would say is, again, just painting a picture of 8% mortgage rates where we're doing transactions sub 4 million is the folks that do the work will win. Now, and again, when I say do the work, obviously I talk to investors, but I want homeowners. I want homeowners to appreciate that a slower housing market is good for buyers, bad for sellers. What do I mean by that? If you have to sell in a slow housing market, you are going to be dropping your price or getting creative with terms, or
Yep.
both. As an investor, if you're watching my channel, we're only doing great deals. We're only doing 30-year fixed rate debt. We're only making we're going to make sure, I want people better hear this. We want to make sure it cash flows at today's interest rates.
Yep.
No hopes and prayers and buy it and date the rate nonsense. No. Make sure it cash flows at 8%. Oh, by the way, whenever rates go to 6, you can do a, rate and term refi and blow up your cash flow, but don't plan on that. I want people to realize in a slower housing market, which we haven't had for years,
Right.
is good for buyers, bad for sellers. And that's what's coming if rates get to 8 and we do 4 million transactions. So, Ty, closing thoughts on that?
I just think what you said is so spot on. I mean, again, I'm so happy for anybody. If you're watching this and this is the first time you've ever, or you're kind of newer and this is you're just getting to know, follow, subscribe to this channel. I've got to say, you've saved my butt so many times where, I could have got into, and, nobody's perfect, right? Even still now I make mistakes here and there. But point being is that I'm looking through a different lens of, okay, I'm not going to do a good deal. I'm only going to do great deals. And then also too, I just think patience, something that you just said, but I'll even go further. I see a lot of people right now in some communities where they're buying stuff and it won't cash flow at all or be stable long-term rental.
Yeah.
But they're going, oh, I'm going to do short-term, or I'm going to do midterm, or I'm going to do this pad split, or I'm going to do this special thing. And it's like, well, only if everything goes exactly right. You could be setting yourself up for a much bigger punch in the face.
Yep.
Just because you don't really have a stable asset.
Totally agree. Totally agree. All right, Pat, we're going to bring it up. If somebody wanted to buy or sell in Fresno, California, you're part of the hub, you're part of the team. They know, trust, they want to do Dream for All. They want to see what's out there. How would they reach out to you, Pat, and say, hey, I want to buy something. I want to buy an investment?
Sure. Call or text 559-825-7559, 825-7559.
And Pat, I just want to say one more time, if we do see mortgage rates get to that 8%, I want your eyes to get this big, because that means Olivia and I might buy multiple deals. Again, 8% mortgage rates, most people will run away scared. I will dive in with both hands, and we will be writing some disrespectful offers. Matt, we're going to go to you next. You're helping people California Dream for All. You're helping people understand what they can get. Again, a slower housing market is good, but you still got to be ready. You still got to be able to pull the trigger. How do they do that?
Right. Yeah. Get yourself in a position where you're able to write offers. You know your numbers. To connect with us, go to greatmortgagebroker.com, fill out the form. We're in 48 states. So whether it's California or elsewhere, greatmortgagebroker.com. One thing I'll say, Mike, because I know you see this and agree with this, and all of us see it to some degree, like buyers can act irrational when there's not a lot for sale. And so they're releasing contingencies. They're bidding above ask. What happens when rates go up is you start to see some irrationality on the sell side. That's what we're looking forward to. We're looking forward to, oh my gosh, I've got to sell. I've been on for 14 days. What's going to happen? And so like quick price drop, agreeing to terms that you would have never thought possible only a few months ago. That's what we're excited about. That's why you're like, my eyes are going to get big, because the irrationality is going to shift to the sell side, where they're gonna have to, like, not fire sell, but they're gonna have to, give concessions. That's a fun time for us buyers and investors.
One more time, what's the website?
Greatmortgagebroker.com.
And then Ty, the last thing, man, you and I are doing a meetup. You're actually staying at my house. Just so you know, you're the first guest coming and staying at the new pad in Vegas. So Olivia and I obviously appreciate you, and you're part of the family. But we have a YouTube series called Buying Vegas that we're going to put the finishing touches on episode 1 later this week. I'm excited. Where can people reach out to you? Because you're just such a giver. You did a meetup this weekend. You're the coordinator of the one we're doing in Vegas. You're the producer of Buying Vegas. How can they find Ty?
You can reach out. You can find me on Instagram, TY_LG, TY_LG. If you want to be a part of the show, if you're in the Vegas market, if you want to come to the meetup, if you want to get together, we're going to be in Vegas this week, Wednesday to Saturday. Michael's speaking at WealthCon. We're doing a meetup on Wednesday night. You can email me for details. Also, the following week, we're going to be at Grow with Video with Sean Cannell. So if you're going to be at that event, or you're going to be around the Vegas market and you want to meet up, let's get together. We would love to get you involved in the show. If you have projects that you're proud of, you want to show off, let's talk about maybe there's a way that we can incorporate your story into the One Rental at a Time community. You can email me, ty@tylg.com, ty@tylg.com.
So at the end of the day, all three of these individuals are a key part of the hub, my Fresno office. They all are go-givers, as you have seen undoubtedly. Feel free to reach out to Matt, Ty, and or Pat, or all of them. You won't be disappointed. Take care, guys. Later.
Thanks, guys.